8:47, welcome back to Wilmington's Morning News. Joining us on the program now is a commentator over at Young Voices, Eric Peterson. We're talking about the two-day Fed meeting that is going to kick off this week, in which the Federal Reserve will announce some interest rate hikes. Eric, good morning, sir. Tell us a little bit about what you're expecting this week from the Fed meeting.
Yeah, I think we're going to see 75 basis point increase from the Fed, maybe even up to a full 100 points. But the Fed has been fairly serious about inflation for the last two meetings. I expect that to continue, especially as long as they have a lot of slack in the labor market. But right now, it looks like they have a political and popular mandate to get inflation under control. The real question is not what they're going to do this meeting. It's how long are they going to keep those basis points up, as I think the market will probably shrink a little bit after that.
So I guess the big question is, we talk about this interest rate hike, either 75 basis points or a full point. What exactly is that going to mean, immediately? What does that mean right now? Right? Because this stuff tends to kind of lag with the Fed. They make monetary policy and it takes a little bit to kick in. Yeah. Are we talking about any immediate impacts, or what does it mean for the everyday Joe Schmo?
Yeah. So the Fed is supposed to be leading the economy, right? So when they're increasing those rates, that means the cost of borrowing money goes up. What that's going to do to inflation is probably not a lot in the very short term. Do I think inflation will be going down just because of a decrease in energy prices recently? But for the average person on the street, it means that they're going to have to pay higher rates to borrow money as well. So if you're looking to buy a house, it'll be more expensive to borrow money for that. Now, of course, you might see a decline in housing prices, and so you'll see some offsets there. But if you're looking to buy government treasury bonds, that also means you're likely to get a higher rate to invest some of that money.
It's a pretty interesting situation to watch unfold. Eric Peterson joining us here this morning. The Fed has come under an incredible amount of scrutiny, and one of the other things this week as well is we're expecting the GDP report that will likely show another quarter of a decline in our gross domestic product. That is the textbook definition for a recession, and now you've got folks like Janet Yellen and others saying, well, it's not actually a recession. You got any thoughts on that for us?
Yeah, the last 10 times we have seen two negative growth periods for GDP. We have declared that a recession. I don't expect that to change. I would just say, in Janet Yellen's defense, we are at a place of low unemployment. So the last time we saw stagflation in the early 80s, late 70s, our unemployment rate was about double what we have right now. So we certainly have more slack in the economy to deal with this, to deal with higher interest rates, to hopefully get inflation under control and not cause the sort of job loss that we had to go through, 40 years ago.
Well, and that's a very interesting point to note is you remember 2008 and obviously recessions prior to that, the economy was really in a really bad shape and people were feeling it everywhere. And this is just different because, yes, there are issues within the economy. There's no question about it. But you do mention I feel like there's so much slack in the economy. There's so much money floating around that it might not seem as bad as it could potentially be.
So absolutely. The economy could be way worse if we were looking at, call it a 5% unemployment rate, mm-hmm. and then we were seeing 9% inflation. The question is can the Fed get inflation under control through a tighter monetary supply and, not really kill the job market? Right now we have double the amount of job openings as there are people looking for jobs. And of course, getting those people back into the job market will be an important part of fighting inflation because it'll increase our economic output and hopefully deal with a lot of our supply chain issues as well.
The Fed meeting, when does that kick off, and when are we going to expect the announcement from Jerome Powell as to what this interest rate hike is going to be?
So that will kick off tomorrow. I would expect we'll obviously see it tomorrow or Thursday. But at this point, the sort of rate hike is already baked into the market. I think the GDP report will actually probably be the most interesting news of the week to see how much the economy shrank. I think a lot of folks, again, are expecting a recession. If we saw a 2% loss, I think that will freak a lot of people out. If it's less than 1%, people might be feeling pretty good.
So I guess from that, and I'm glad you mentioned that that's already kind of baked into the market, is that you wouldn't expect to see either a huge jump or a huge decline no matter what the announcement is, because it's, as you mentioned, it's been talked about now for pretty much since their last meeting that they were going to do something similar again.
Yeah, and I think it's one of the best things that the Fed can do, right? If they have a predictable rate schedule hike and they stick with it, no matter sort of what the other macroeconomic factors look like, I think it'll certainly help. I don't think, we're going to get a soft landing anymore, as they say, but predictability and stability out of the Fed would be a welcome change.
Eric Peterson joining us here this morning. Eric, I know you got to run. Appreciate your time, and hopefully we can catch up with you again soon, all right?
All right. Thanks so much for having me. Have
Absolutely.
a great day.
My pleasure. Eric Peterson joining us here this morning. Looking forward to this meeting of the Federal Reserve, the Federal Reserve Board of Governors, a little bit later on this week, when they will be once again deciding what to do with interest rates. Looks like either a 75 or a full point basis hike is kind of what has been floated around, as unfortunately, at least from my vantage point, we are a day late and a dollar short on this. And it's now the Federal Reserve trying to play rapid catch up, and hopefully they just don't do it too fast and send the economy into some sort of spiral out of control. We appreciate Eric's time this morning.